Okay, folks, hello, how are you? So, we're going to go through page 16 on the questions that's posted, and I'll answer them tonight. And then I'll do page 17 tomorrow, and then 18 and whatever is remaining, I'll knock out before 5 o'clock Thursday. And then I will be breaking for 2 months and returning on February 2018. I don't want anyone expecting me to answer your questions between those two periods or those months. Um, it might happen, but I want you to understand that it might is not a guarantee. Okay, so I really want you to think that if you're asking questions after Thursday, the last day of November 2017, um, I probably won't get to your question until next year. Okay, I need a break, I need to recharge, and I need to spend some time with my family. So we're going to be going away a couple places and recharging the battery. So I probably won't be that active on Twitter either. So again, as a reminder, please do not be alarmed. I will be back. I will be working with you all again in 2018. So just enjoy your time with your family during the holidays, and just know that we'll be back together again in 2018. Okay. All right. So the first question on this page is by Sozo. Okay, and the question is the green area. The green area is fair value gap. However, is the red area considered fair value gap since the candle closed the green area? Okay, and this is actually, let me zoom in and make your chart bigger. Whenever you have one single candle pass up or down, okay, like in this case here, we have one big singular candle down, one big singular candle up. If you go back and look at the analysis videos I gave, I outlined how this was a fair value gap that turned eventually into a balanced price range. And what does that mean? One singular candle passes through this entire range, and then one singular candle passes through that same range. Okay, so this becomes like a brick wall. And you look at what has happened since then on your daily chart. The euro dollar came right down into that, found support, and rallied away. So there wouldn't be any necessity. It can come down there, but if it comes down through this, when this element is there, it tells me that it's actually very bearish, and I wouldn't expect it to come down the filling kind of gap and then rally. This criteria here shows that there's a balanced price range. In other words, when we look at fair value is an imbalance of either buying or an imbalance of selling, and we would reasonably expect to see price come back up and fill in that to a fair value level or bearish order block and then trade lower. Vice versa, if this condition didn't exist, we would look at this as a fair value liquidity void. Okay, so in other words, we would expect price to trade back down and pick up some more orders and trade higher. That is not the case when we have just this whole spatial element where this whole entire range of price here in your shaded area and over here, this has been passed through 2 times. So the likelihood of it coming back down into it again would be, in my mind, indicative of bearishness. Otherwise, it should be supporting price. And you can see in your daily chart, it does in fact produce that as we outlined before it happened in the weekly analysis video. Okay, so that's that one. And the next one is doing my weekly recap, Euro monthly. I noted how the bodies of the candle respect the fair value gap. Would you consider this a form of resistance? And the wicks going in the fair value gap could be considered manipulation. I would view that as accumulation, and it's the same way that you would see it on a lower time frame chart. The same thing's existing here. You can see we went down to the mean threshold of that fair value gap. Now, initially, from what you have outlined here, I'm going by your charts. Let's zoom in a little bit. Well, as you can see, it's not zooming in much, is it? Well, you have one big monthly candle, and then the candle trades down, creates the low, and we went midway point of that here on a monthly chart. So all that's doing is coming down into fair value and finding equilibrium, okay, or the mean threshold, midpoint of it, and then picking up more buy orders and then rallying up. So it's not so much that I would see it as manipulation, more than it's a run on liquidity. Okay, so that one's done. All right. You mentioned a few times in the past you can predict where price will be in the next 2 to 3 months. Can you use a pair and show us in detail how you do this to predict where its price may be in the upcoming months? Thank you. Okay, well, I have a time horizon that's about 2 to 3 months out. Okay, now please do not take this and go back and you'll listen to me say it. I'm not always right, but generally I have a pretty good idea where price will go every quarter, okay, every 3 months or so. Now, your question is going to be is if I'm that good at it, why don't I trade the daily highs and the